All right. Here we go. We're live. Good morning, traders. B. James here, your day trading dad. Pop quiz for y'all. What's the number one rule of all-time highs? Any ideas? Don't short all-time highs. And I'm not saying there aren't people who can't do it. What I'm saying is I've seen people trying to short this week lately. And even my mentor, one of my mentors who I mean, he's a really good trader. I've seen him take a couple of shorts this week, and I don't know, man. Would you short this looking at this in hindsight? I mean, I sure wouldn't. According to Edgeful, NQ is bullish some 62% of the time or something like that, 65% of the time. 65% of the days are bullish on NQ. And when I looked into my stats, I noticed that my short win rate was significantly lower than my long win rate for me personally. So that's a rule I've made for myself, is I do not short all-time highs. Now, that doesn't necessarily mean it's good to long either. And sometimes that means no trade is the trade. So let's dive in and see what we got for today. Ultimately, all right, so second question. Here on NQ, what's the border flow? Is it bullish? Is it bearish? Like simple, quick, 2 second, it's bullish, right? Candles are going up and to the right. You don't have to make this any more complicated than that sometimes, we can add a few nuances to it. Like here, I've put a fib on the previous day's candle just to identify the 50% level. And that's a little more nuanced measurement of, is price currently above the 50% level? Okay, we are. Then possibility for more bullishness. Here I've got a red gap. The red gap signifies the possibility of, how I want to say this. It's a developing inefficiency. And I keep that in mind because price today might want to trade down, fill in part or all of this inefficiency before continuing on its bullishness. And that's the thing where we need to understand that just because candles are bullish doesn't mean it's going to be bullish right now for this session. New York AM session could trade down to this and form a low right down in here, continue on, and then close up here. So it's a dance between these things, right? The daily bias for me doesn't technically matter nearly as much as the session draw on liquidity. But I got to take both into account. Here on the 4-hour chart, where'd they go? That's interesting. My 4-hour just disappeared. But we got a 1-hour chart. Gonna lose all my drawings, aren't I? So here on the 1-hour chart, this isn't looking super sexy. The 1 hour is kind of consolidating and flagging, floating upwards, which I'm going to show you this chart here. Look at this. This is interesting. This is the week broken down by 15 minutes and broken down by days. Looking at the pattern between the Asia, London, and New York sessions. Now, Monday was low, London high a day, New York low a day, kind of a consolidation day. And all week long, London low a day, New York high a day, London low a day, New York high a day. We can just see this upward climb in this pattern so far, where we keep getting London low a day and New York high a day. I don't think that's going to happen today. I think we'll get a potential for a possible New York low a day and high a day. We shall see. All right, 4-hour chart. Is it back? No. Oh, yep, there it is. But I lost all my drawings. So, not a big deal. I guess I was just, and even then it's still loading. I'm not going to touch it. So what were we talking about in the 1 hour? Not so pretty. We still have external range liquidity available above us, which if we look at the daily chart, we've already taken the previous day's high, and that is often an objective for the session or the day. Doesn't mean it can't continue to expand. Like look at yesterday, it took, it just opened above the previous day high, never formed a tail and continued on. We do have 2 days of expansion, indicating a slight more probability of retracement in today's candle. Doesn't have to, But we can typically see, you know, in the daily chart, it can get rowdy, right? Look at all these days of expansion. And then it kind of went into a pattern of expansion, retrace, expansion, retrace, expansion, retrace. So a couple possibilities there. So on the 1 hour, we kind of have these gaps down here. More than anything, I like this gap here. There's a gap here. We have a new day opening gap, and we have some equal lows sitting down in here. Discount. And this is where we start measuring multiple levels of premium and discount, where, you know, locally we have this swing low and the swing high. So we have this local premium and discount, but then on top of that, we also have this premium and discount, and they just start stacking. But I want to keep both in mind, because that dictates my trade grading, my context grading, you know, like the shallower retracement in the dealing range, what do I want to say? The lower I grade, the quality of the context for the trade, because there's both the trade model, like, is it an A+ trade model? Do the candlesticks on the 1 minute chart look super pretty? But then there's also the context grading, like, what's the higher time frame look like? What's the 1 hour, 4 hour, daily? What does all this look like? You know, like this consolidation pattern isn't ideal. So yeah, that lowers my context grading, and I should add that to my sheet. Let me show you. I'll come over here. So I'm developing this context clarity score. It's a part of my whole trading model, you know, where I have all of my my standard operating procedure. This is my checklist for trades to make sure I'm staying on course. This is my trade grading. So I break down A+ to B setups. I've got documented screenshots for A's and B's. And then the context clarity score. I'm just going to add a row right here real quick so we can do this together. Oh, just want to higher time frame, not consolidating. Just going to add that into here. And so I'm just kind of like giving myself an idea for the overall conditions, but we don't have tons of time. We have 2 minutes until open. So ultimately, I'm bullish. Bullish order flow. We're overextended in premiums at all-time highs. The 1 hour is starting to slow and consolidate. I'm wanting 9:30 to sell off for longs. If it doesn't do that, then I don't have a play today. Now remember, today is day before NFP, NFP week after FOMC week. Nonetheless, the goal of this week is not to profit. The goal of this week is capital preservation and surviving, okay? The price action will be unruly at times. The price action will punk you out at times. I've seen it all week long. It is not a week for profits. It's a week for preservation. And I don't know where you're sitting at this week, if you're red or green. Here's my P&L calendar. I have one partial win this week. And last week I had 0 trades. But I've gone through weeks like this where I've wrecked accounts, put them in a drawdown, given back months of gains. So I feel pretty stoked going through these are 2 of the weirdest weeks I've seen trading NQ. So don't feel bad if things are not going very well or if it's hard. So here on the 1 minute chart, we have 1 minute, 8 seconds until open. We can see prices at the 4 hour equilibrium. We have equal highs above. Here's the hourly 9 o'clock hour open. And then here's the 4 a.m. 6 hour candle open. 6 a.m. 4 hour candle open. I don't know. I feel like I'm dyslexic with that. I always say it backwards. So let's see what happens. So already we got a stop hunt towards buy side, taking out those equal highs that were above. That's not like, see this beautiful liquidity right there. Took it out. Didn't leave much in the way of fresh equal highs. But for me anyways, I want to see it trade down to midnight open approximately. We have some trend line liquidity right down in here. We have equal lows so we got, the markets are decoupled right now, signifying that this might be a manipulation at the moment. A little early to tell. We'll see what plays out in the next few minutes. But you know, this is where I can imagine some people are possibly like looking at shorting this. They're like, oh, here's some break or order block. Here's a liquidity sweep. Here's bearish SMT at the highs. Not for me, my friends. I I have bullish targets, but I always want to see 930 trade against my ultimate drawn liquidity. And my drawn liquidity for this session is London high. So it looks like ES is kind of slowly trading down. It's the middle asset. NQ is trading down. It's the lagging asset. It's the weakest. YM is the strongest asset at the moment. And looking like a little bit of seek and destroy. Looking to see some back and forth on these candles. How big's the range? I mean, that's a 160 tick candle, 40 handle candle, not huge. At least not by current standards. I know I'm doing, like I back test a lot. And so I go year by year. I've done 2025, I've done 2024, and I'm currently doing 2023. And it's just surprising looking at the volatility. And in previous years, you know, candles are 40 ticks, 20 ticks, you know, like they're just so much smaller. The volatility in the last year or two in the NQ, and it's what I'm used to, is just massive. So if you're getting value out of any of this, I would appreciate a like at least. That would be amazing for me. Even better, a subscribe. It means a lot to a small channel like me. And even better, if you want to really help me out, leave me a comment. Let me know what's working for you right now or what's not working. That's kind of one of the things that I feel like I'm really good at, is I'm really good at creating consistency. One second. I was going to share something, but I just kind of want to see what these candles are doing. So like right here, it's looking like it's going to invert this or flip this back to an order block. Didn't close above. So this is really, so YM selling off. Now NQ is pushing higher. Let's flip time frames a little bit. I don't really think we'll see anything. Which I'm not going to lie, it's a little bit disappointing. In my data shows me that typically NFP week and FOMC week, they typically have 2 to 3 okay days. And the other days are not good. But what has been odd about the last 2 weeks is last FOMC, there was not a single solid day to trade, in my opinion. And then this FOMC, or this NFP, there really hasn't been either. Let me see if I can show you the data real quick. Or it's over here. It's in a spreadsheet, actually. Right here. There we go. Sorry. Too much going on. And I've showed this a couple times before, and I hope it's not overwhelming or confusing. But ultimately, like, we're looking at NFP week, and this is this week currently, right? Just looking at AM and PM sessions. 80% of the time, Thursday before NFP I classify as clean price action with clean models. And this week has just not been the case. The only day has been Wednesday, yesterday, where I classified as clean enough, and it still wasn't amazing. NFP Friday, not the case. 33% of the AM sessions are worth trading, so not at all. And 50% of the PM, I don't trade NFP Friday. But back to the charts. Oh, anyways, what I was saying, so I saw what I wanted to see, is that I help traders prevent themselves from self-sabotaging and help them master execution, so that way they can build repeatable and reliable results instead of random wins. And I do it for free in my Discord. My Discord's free. If you're interested in that, there's a sign up, below in the description. It's one of my superpowers in terms of like discipline, process development, kind of turning trading from something emotional into something mechanical. Really has been one of my biggest interests in trading. Is like, I love reading price and I love perfecting my model. But more than that is what I find so interesting is traders get stuck in this gap between being able to read price and have a model and finding consistency. And there's that gap right there. Why is it so many traders are stuck there, right? It's pretty easy to read price, pretty easy to find a model, but yet so many people spend months and years in that limbo phase. And a part of my journey has been stuck in that phase as well. Probably I feel like longer than I would have liked, because I am super, reading price is really easy for me, and mastering a model really easy for me. So why did it take me so long to find consistency in live trading? I don't know. It just was part of my journey. But in that struggle, I found out a lot. I built a lot of frameworks and systems. Like, I had to build things, basically like guardrails. You know, think about like a go-kart on a go-kart track, right? They aren't easy to control. The slippery slicks, the polished concrete, they're fun. But if you're not seasoned at it, you'll watch new drivers just kind of spin donuts on the carts and slide out in turns. But those guardrails, they help keep them on the track, even being newer at racing go-karts. Well, similarly in trading, we need guardrails to keep ourselves on track. And especially up front, when there's a lot of unseen emotions, unobserved emotions that screw you up. These little micro variances is what they would be called, like even just behavioral variances. Like, for example, maybe you took 3 losses in a row. And so on your 4th trade, you decide to, I don't know, I'm going to break even early because you think you're being smart and preserving your capital, right? You're like, I've taken 3-4 losses already. I'm going to break even early, preserve capital just in case. And then that's the trade, of course, that stops you out of break even and then rips to your take profit and would have offset your losses. Well, why is that? Because that micro behavioral variance, that fear-based, and it wasn't like obvious, you weren't at the charts panicking, right? With an increased heart rate likely, but you nonetheless were like, I'm not sure about this trade, I'm going to go break even. And so those little behavioral variances, for example, those are things that can really destroy a win rate in real time. And those things start stacking up. Like, we already have market variance, you know, we have win model variance. So market variance would be like, you know, just what are the conditions today? What's the regime today? You know, the variance in the market in front of us right now is, it's not good price action, right? Model variance is in good conditions. What's your model win rate? How is it likely to vary from that? And then behavioral variance is, what are all the stupid things we do as traders to screw ourselves, make things worse, reduce our profits, increase our losses? Those are the behavioral variances in that gap that I find between being able to read price, have a model, and being consistently able to produce results on the charts. So, yeah. Not a lot going on. I wasn't expecting anything until 950 anyways, but this isn't giving me much to go off of. This is looking a little bit more like a short setup. Oh, excuse me. A short setup or a one-stage delivery. Either way, I'm not interested. You know, what I want to do is, here's the 930 opening price. I want to buy below 930. I'm always looking at what's the opening price. I want to buy below 930. I want to buy below the 6 a.m. candle open. I want to buy below the 9 a.m. candle open. So here's 3 lines that are really important on this chart. Because look, if this hourly candle is accurate, there's a little bit of consolidation forming the tail. The low breaks above the open, probably retests, continues up, and then closes like that, you know, open, high, low, close. Now, it can also flip this and form the tail up here and then distribute down. It could do that too. But this is just a framework and a way to read how to say it. I find things like these help me kind of contextualize what I'm doing. Because if I see a trade below 6 a.m., 9 a.m. open and 9:30 open, like that helps me with my confidence to feel like, yeah, I'm longing below those early at after the open. I feel good about that. Up in here, I wouldn't feel good about longing. This is the regular trading hour gap, so we're paying attention to that. 50% has been filled in, 3/4 has been filled in, hasn't reached the open yet. We can see ES is selling off, YM is selling off, and now NQ is just kind of consolidating, seek and destroy upwards. And I was hopeful for a trade today. I was thinking that price action has been so gnarly the last 2 weeks, and we saw an okay enough day yesterday. I thought that today, maybe I was like, oh, maybe today will give us A+ price action today, finally. So far, this is not the case. Here's the first presented fair value gap. Look at that. It took 10 minutes for that gap to form. Usually, in good price action, we want to see that gap, this first fair value gap, form in the first few minutes. So contextually, like, you have your like context clarity, you have your model quality, right? Context clarity, model quality, and those two things add together to form the overall picture of should you take the trade. And this is why A+ trades fail. Well, two reasons. There's, why do A+ trades fail? For one, they just fail sometimes. Like, that's part of it. A+ trades have a certain win rate, and sometimes they'll fail. But additionally, you'll see when you combine that with the context, and this is more advanced stuff, obviously, if you're a newer trader. As a newer trader, the first step is to learn price. The second step is to learn a model. And then the third step is to learn the context, right? Contextualizing when that model is high probability and when that model is low probability. All these things that I'm talking about are context-based. Like, I don't talk tons about the model. The model's, I guess, pretty simple. But what matters more than the model is the context. And this is a lot of what ICT traders talk about, with the narrative, context, and not pattern trading. So there wasn't even a 30-second inversion, but it'd be nice to see some distribution towards sell side down in here. And even this is kind of what I was telling you about the open, high, low, close with this 9 a.m. Like, it may look like it's forming a tail and starting to break out for, sell side distribution. It may sit here and consolidate around the open. It may do this, come down for one more sweep, and then do this. So while the open, high, low, close is helpful, it's also helpful to study the ways in which it can unfold, because it's not always so straightforward. Because that's what always threw me off with open, high, low, close at first, is like, I'd be like, oh, look, here's the open. That's a nice looking tail. And here's even an inversion. And here's closed above the breaker, And here's a long that failed. Some nice distribution. Okay, so I need to pay attention now. I would have liked better quality targets locally. Oops, shoot. I moved my 4-hour open. So we're below the 4 a.m. open. We're below 9:30. I want to see it ideally touch midnight open. I don't like this right here. You see how this candlestick's responding, filling in that gap. So now there's no inversion to get in on. Sweeping some sell side. Maybe there's a 30-second. No, there's not. Which is cool. I want to see it trade down. We have a new day opening gap right in here. I don't know why it's not loading. I can see it on the 15-minute chart. Oh, there it goes. Took a second. So we have consequent encroachment of this new day opening gap. I think it's still untapped. Yeah. Previous 4-hour low. So we do have equal lows in Asia low down below 2, but there's, you know, contextually, like how far is that? That's another 50 handles. So it doesn't bug me out tons. So in a bullish market, we assume sweeping of lows is manipulation to go higher. I'm just bummed we took the equal highs above. Looks like ES has got some beautiful liquidity right there. See, I wish NQ looked like that. But I like that price is at least moving. I like that it's moving opposite of my bias. I don't like how the candles are forming. I want to see some gaps. I'd like to see some better targets internally to this leg of price action, even if my draw on liquidity is higher. I want to see nice looking targets locally. That gives me more confidence that it's at least going to come to this zone up in here, like on ES, for example. These beautiful trend lines right there, these near equal highs, probably perfect equal highs right there on ES. Like that, to me, that gives me confidence that the trade's going to want to bounce back up into here and likely continue for London high. So the markets have synced up, selling off. Oh boy. So here we do have a 2-minute inversion or fair value gap, potential inversion. I'm not seeing SMT at the lows. Oh, there's an SMT. There is a bullish SMT forming. But we've only swept a 1-hour low. Yesterday it didn't touch the 12 a.m. Looks like ES has crossed 12 a.m. YM has crossed 12 a.m. So really, there's only a 2-minute gap. I don't really like this 2-minute candle right there. It's okay. It's just got the momentum was lost in it. There's only 20 seconds. Excuse me. 1:20. I don't really trust this. There's enough contextually that makes me not trust it. We didn't sweep as much liquidity as I wanted to see. Midnight open still below, equal low still below. This consolidation right in here. The way YM and ES are behaving. And it could be a valid trade. It is technically a valid trade. It could be a winning trade if it closed above this gap. I'm not interested though. It's not an A+ model. It's not an A+ context. And it's not even a valid model at the moment. Maybe the next candle will close above, but with these 3 strong rejections, not overly stoked about anything in here. Here's some nice momentum here. Let's see what it does. Kind of a little miniature inversion breaker on the 1 minute. All right, so this candle is going to close way up in here, possibly. If it does, it really leaves no room for getting into the trade with a reasonable risk to reward ratio between this swing and this high. Trading view must be slow today. So there you go. You know, I would have marketed in on that. Still has 1-to-1 potentially, so there's enough risk to reward. But I'm not taking this. So here's 1 RTP. Cool, TP1 would have gone break even. This was not an A+ trade in my eye. But, you know, we can see it traded below the 4 a.m., 6 a.m. 4-hour open for that long. And we still don't have the assets in sync. ES is kind of turning around a little bit, and YM is still falling. So yeah, I think, and this is like the real part of trading. Sometimes you have to let it go. This to me was a 50-50 play, and or worse potentially. And There's so many things that were not A+ about it. The gap wasn't very big. The weakness in these 3 candles, the lack of significant equal highs internally for targets, the lack of sweeping a more significant level than this 15. I think there's a 1 hour swing, but it didn't come into anything else. And that's okay. There's SMT. It doesn't have to come down in here. But all of it combined, the 15-minute being sideways, the 1 hour kind of slowing down, all of it combined contextually told me that this was a lower probability setup. And so I feel good about passing it up because that's the control that we need to have as traders, I believe. Now, had it been different contextually, or if not all of those things that added up, then maybe so. Maybe I would have taken it. Maybe I would have said, okay, this gap's a little small. These candles are a little slow, but man, there's just beautiful trendline liquidity right up in here. We tapped into midnight open. I'm good. I'm good to put risk on the table for this. But that was not the case. But it's also good. Excuse me. Whew. It's also good when, to look at the wins today. I preserved capital still. That's a good thing. I called it right in terms of I want to see price trade down, make my model, and trade back up. That feels pretty good too. To at least have, that's confidence building, and that's important. I might not have profited, but it's process over profits. And I think that people misunderstand day trading, that how I would equate it, to comparing like an entrepreneur, a business owner versus a professional athlete. In business, you can kind of get away with a profit-focused narrative, like the idea being, how can you solve people's problems and they'll pay you? It's pretty freaking simple. And so you just solve problems. You can start a business doing, vending machines, junk hauling. Doesn't take much experience, knowledge on the topic. Some, not tons. And you can turn profits. But trading's not like that. I like to consider trading more like a performance sport, professional athletics. You won't profit focusing on the profits. You have to focus on perfecting your process, and then the profits will come. No different than an athlete can't just be like, I'm going to make millions. Like I couldn't just join the NFL and make millions, or I couldn't join, get in on MMA and like win and be rich. Like I couldn't do it. Now, maybe if I focused on the process for years, and maybe if I was 10 or 20 years younger, in my 20s again, maybe I could. So I hope that makes sense. Trading is, and it's not the sexy stuff. Like no one wants to hear it's process over profits. But at some point, if you haven't realized that already, you'll realize it. You'll be like, I'm getting nowhere. And then you're like, well, focusing on profits, greed and tilting is not getting me anywhere. So I guess I got to take a step back and perfect my craft. And I suppose that's the difference maybe between the people that just get in it as a get rich quick scheme. Like, oh, I can do some day trading and make some money. Versus those that actually like love the process. Like I love the process. I love reading charts and candlesticks. I did it before, I used to wake up at 5 a.m. before I was running my other business and just read the candlesticks. Not like I was getting up at 5 a.m. to work on my business. I was getting up at 5 a.m. to read the candlesticks. There's just a passion in it for me. So what do we got now? Nothing. Let's just document the day, I guess. And there was 9th. So this is the other thing I do. I write down my pre-market thesis and ideas so I can check that later. I typically write session play-by-play down. When I do the recording of these streams, I tend to forget to, probably more because I'm talking about stuff. So 9:30 was seek and destroy, then 9:40 640 traded down into sell side liquidity. 952 formed A- model in B+ conditions. No take, and it was a W. Best action of the session, I do think, was sitting on my hands. Nothing was high probability today, and that's unfortunate in the way I like, cool, this is the slowest week I've had, slowest start to a month I've ever had. But that's part of trading too. So that's the day. Now, one thing I know for me, I know my probabilities decreased significantly at 11. I know we're day before NFP, and I know with this sweep here, it's very unlikely that there's going to be anything else for me. I know that if price comes back down in here, I'm probably actually not interested in the long, because that's telling me it's probably wanting to do some like 1 hour seek and destroy kind of thing. And I don't want to really be a part of that. So that means I'm logging off early today, a little earlier than normal. Part of me wants to see where this goes. A part of me doesn't really even care. So yeah, no, NFP tomorrow. I'm not going to be streaming. Next week, all week, what do we got? Let's check the calendar together. Must be my internet being slow, which could be par for the course. I live out rurally in the middle of nowhere. But they're running fiber optic internet out to us. I am so stoked for that. So next week is core CPI, PPI, retail sales, all 830 red folders, and then some Fed chair nomination vote. So that's going to hopefully be a better week. I'm really looking forward to better price action than this.